Hello traders, and welcome back to another video. Today we are going to be discussing trade accuracy and how we can improve our win rate. A lot of traders that I speak with have a great idea of, okay, this is a high probability inversion. This is a bearish breaker, a bullish breaker. All of the ICT concepts that we know, they have the knowledge, but they can't get the draw on liquidity correct. And we know that the draw on liquidity is our number one priority. If there's no draw on liquidity, we do not take a trade. So today we're going to discuss how we can increase our win rate and our trade accuracy by having a better idea of where the draw on liquidity is utilizing my model macro power of 3. So getting right into it, we need to understand that as traders, in order for us to have success, less is more. So you see 3 bullet points right here on the screen. Number 1, draw on liquidity. No clear draw on liquidity, no trade. Okay, so today, as we're going to progress through the video, we're going to dissect draw on liquidity and how you can get a better idea of where price is going and where you can be targeting to have better, higher quality trades. Number 2, we've grouped these 2 points together. Manipulation and time. Now, if you have been following the channel for a while, you probably know where I'm getting at with this, but of course we will discuss it here with chart examples. And number 3, reversal/entry confirmation. So these 3 points right here are the pillars of a successful trader. Less is more, especially with ICT concepts. As we gain knowledge, understanding all of the PD arrays, it can get overwhelming understanding, okay, should I execute on the 5-minute, the 15-minute? Why should I watch this hourly BISI over a 4-hour BISI? But all it really boils down to is positioning yourself at the right time when there is a clear draw on liquidity. So once you understand the framework of what we're going to discuss here today, you're going to be in a really good spot where you know exactly what you're looking for coming into a trading session, and that's where you want to be. So let's progress to the next slide here. Our foundation is power of 3, or you've probably seen it described as accumulation, manipulation, and distribution. But we can dissect this a little further to have a better idea of how we can get involved in the distribution phase after identifying the manipulation phase. Okay. First, we need to understand accumulation and what we want to see from the accumulation phase to have a high quality setup, and by extension, again, to increase our trade accuracy. So we want to see the accumulation phase go range bound, or in other words, how I refer to it, we want to see it engineering liquidity, building equal highs or relative equal highs above market price and equal lows or relative equal lows below market price. So while we're seeing a range being built, we don't push any buttons. We're not taking trades. We're not nervous. We're not guessing which direction it's going to run first. We're waiting for the range to be built, and we want to see this because after, as we're going to discuss here, you can get a very, very good setup. So if we progress here, let's identify the manipulation phase. So these examples are for bullish scenarios. Okay, and you just flip and reverse the logic for bearish setups, of course, and we'll look at some bearish examples when we get to the chart portion of the video. Okay, so identifying manipulation, we want to see price go below old lows and below key opening prices. Now we can dissect the manipulation phase further, and this is your major advantage as an ICT trader, the element of time, or a macro window. So some of you probably know that macro window spans from X50 to X10. Okay, so for example, I trade the New York session. So I'm looking for trades the majority of the time after 9:30 New York open. So the first macro for me would be the 9:50 macro, or in other words, 9:50 a.m. to 10:10 a.m. Eastern time. The next macro would be 10:50 a.m. to 11:10 a.m. Eastern time, so on and so forth. But with all the concepts that ICT has given us, draw on liquidity, clear draw, relative equal highs and relative equal lows, as we'll discuss here, and the relationship between liquidity and macros or time, that is your major advantage. Okay, and then the pieces of the puzzle I'm going to continue to discuss here to keep it as simple as we can, right? Macro power of 3, which I'm sure if you guys have seen my channel before, it's just a completely simplified, streamlined checklist, if you will, to understand when we should engage with price with confidence. But it requires patience in between the times that the model is not there. Okay, so we want to see price for macro power of 3 manipulation go below old lows, but below macro's opening price. So if I rewind a bit, macro open for the 950 macro, let's say, that 950 opening price on that 1 minute candle, I want to see price go below there, run old lows, and then offer me a setup, which we'll get into right now. Okay, so after we see price deliver below macro opening price, run those equal lows or relative equal lows from the accumulation phase, all we're waiting for is a close above this bearish fair value gap or SIBI right here, because the bodies tell the story, right? So a question that you want to ask yourself is, after the macro manipulation occurs below macro opening price, after the run on the equal lows or relative equal lows from the accumulation phase, is bearish order flow breaking down? And all that means is, do we see a candle close above a premium or bearish fair value gap? Okay, so if we rewind here and put all the pieces of the puzzle together, this is macro power of 3. Accumulation, manipulation during that macro window below macro opening price, and then that closure above that bearish fair value gap, turned bullish inversion, of course. That is our confirmation that bearish order flow is breaking down and that price is going to start gravitating towards the equal highs or the relative equal highs from the accumulation phase. Okay, so the major advantage in terms of your perspective on liquidity from this video, if you're struggling with win rate, with getting the draw on liquidity correct, instead of just, even with macro power of 3 entry criteria, instead of just targeting one singular swing high when we see that checklist play out, you can have a rule where you can only enter a trade when there's equal highs or relative equal highs, like we'll see throughout the chart examples. So let's get into those examples right now. Number 1. NASDAQ chart, 1 minute time frame. So all of these examples will be on the 1 minute chart, and this is where I want your focus to be on if you're utilizing this logic for your trading model. So as we see here, price is going up and down, building a range. We have a low here, we have another low here. So relative equal lows, and then internally, there's another swing low, another swing low, another swing low before the drop down here. And also, we have on the other side of the range, a high here, an equal high here, and another swing high here that they leave right before they go down. Now, this is what we want to see for macro power of 3 high probability setups. We want to see price run the engineered sell side liquidity below macro opening price. So if you're new to the channel as well, if you ever see MO on my chart like you see here, I'm just annotating macro opening price. So we're operating within the 2:50 to 3:10 a.m. Eastern time macro window. So during London kill zone. Okay, so this model, these concepts work for London traders as well. Asia traders, we'll look at examples here as well. Okay, so this is the 250 1 minute candle. This is the opening price. Price goes below, delivering for the manipulation phase, below macro opening price, running the engineered sell side liquidity. And then after that occurs, what did we mention earlier in this video? We're looking for a closure above a bearish fair value gap, right? And think about it this way. After we run old lows and knowing that we have equal highs or relative equal highs above market price, would we want to see, if we were truly bearish, price just close right above a bearish fair value gap or a SIBI? No, and the bodies tell the story. So we close above, we come back into this. Now, for this particular scenario, we have a BISI or a bullish fair value gap overlapping with a SIBI or a bearish fair value gap. So we do get a close above that bearish fair value gap here. But when we have a BISI here, this is a BPR or a balanced price range. And when you see the macro power of 3 checklist in play, and this is what is offered at the reversal point, you're going to get the best of the best setups. But again, before the entry criteria for macro power of 3, to increase your win rate, to have higher trade accuracy, you want to see them build a range with relative equal lows, relative equal highs. Then you just wait to see which side is ran and see if you see the reversal signatures like we see here. Let's progress to our next example. So we're still on the 1 minute time frame. We're still on NASDAQ. And now we're going to look at a bearish example during the 12:50 to 1:10 p.m. Eastern time macro. We're not changing how we read price. We're not changing how we engage with the market. We're looking for the same signatures, and we have a specific time window that we can operate. Time is the major advantage. So again, what do we see here? Consolidation, chop, range bound, whatever you want to call it. They're building a high here, another relative equal high here, a high here, an internal high here. And on the other side of the range, we see a low here, a low here, low here, relative equal lows. So they're building up liquidity, engineering on both sides of the market. So when we start to see this, we don't want to do anything within here. And this is going to save you a lot of headaches. You're not worried about if you should short this SIBI when we come up into it, or if we should long it when we close above as an inversion, or this little BISI here, do I long it and then reverse and go short? You're not focused on that. Your priority is the liquidity and the entry criteria that we see here during the macro window, okay? So again, this is MO, macro opening price, that 1250 opening price on this candle here. We go above, we run the engineered buy side liquidity, so the high of the range, and then we zoom right back down these two consecutive BISIs. Okay. If we were truly bearish, or truly bullish, would we want to see price after running the highs just come right down and have no problem closing below bullish fair value gaps or BISIs, knowing that there's clear as day relative equal lows below those fair value gaps? No. So this is confirmation that this is a turning point and that price is going to want to seek the opposing range engineered sell side liquidity. So it's time and price. And reading price this way is the epitome of time and price. You have a checklist at specific times throughout the day that you want to work, that you want to operate. And there's a set criteria that needs to be met in order for you to engage with price. So again, this entry checklist for macro power of 3, do we have a clear draw on liquidity? Yes. All this relative sell side liquidity down here. Is it a macro window? Yes. Is there buy side liquidity swept above macro's opening price? Yes. And then we have your high probability BPR entry where, similar to the first example here, we have two BISIs and the SIBI delivering through those. So this is the balanced price range, and these are the best entries here. We come back up into it. That's your entry. We expand to the opposing side of the range, that engineered sell side liquidity. Okay. But you want to see the range be built. You want to see liquidity built on both sides. That is the main takeaway for today. Okay, let's move forward. The 1 minute chart again. Is it a different way to approach the market? Are we looking at price a different way? No, we're using these things again and again and again. So NASDAQ's chart, 1 minute time frame, we see a high built here, a relative equal high built here. On the opposing side of the range, we see a low built here, a low built here, an equal low put in here, right? Right here, they run down at the start of the 1050 macro. They're running all that sell side liquidity, right? Below macro opening price, leaving the buy side from the opposing side of the range. And then we're just closing above this bearish fair value gap here. Close above, you're long in here. Note the bodies. You want to see the bodies respect these PD arrays when you're looking for your macro power of 3 entries. And we expand to the opposing side of the range. Okay, let's move forward again. Now for you Asia session traders, this doesn't change. When you see this profile, this range bound condition, and then manipulation and distribution as we've discussed here, you can get great entries. So this is the 7:50 p.m. to 8:10 a.m. Eastern time macro window. We see a high built here, engineered buy side liquidity here. Now, when you see trend line liquidity like this as well, you're going to get the best of the best trades when you see the entry criteria be met during that macro window. Okay, on the opposing side of the range here again, you see a low built here. You see a relative equal low built here right before that macro window. So this run up is just inducement, manipulation below these lows, closure above the premium PD array or the bearish fair value gap here, retracement in, and expansion to the opposing side of the range, that opposing engineered buy side liquidity. Range bound, let one side be swept during the macro. Look for your reversal signatures. That's your entry. Okay, let's look for one more example here. NASDAQ's chart again, rinse and repeat, bread and butter. This is what we're looking for. 1 minute time frame, Do we have a clear draw on liquidity for this macro power of 3 long example? Again, look at where we are, 7:50 p.m. to 8:10 p.m. Eastern time window. That's the Asia session, okay? Low here, relative equal low here, another low here, a relative equal low right before the manipulation phase actually takes place. And on the opposing side of the range, we have a high here and a relative equal high here, okay? So everything's checking out. They made relative equals on both sides before this aggressive expansion below for the manipulation phase. Now this one, I included this in here because I get this question a lot. Can the execution, the actual entry, occur after the macro window? Yes. Best case, it occurs in the window, but if you see the checklists play out, if you see the opposing range liquidity clear as day, and in this case, engineered sell side liquidity be swept below macro opening price, and then we get that close above, this is still valid. Okay, but for my favorite setups, what I would prefer, it occurs during the macro window. Okay, but still, we see that engineered buy side liquidity, engineered sell side liquidity, manipulation during a macro window, our confirmation of reversal, and our entry. Okay, so I hope you guys enjoyed this video. I understand how frustrating it is as a trader to spend hundreds, thousands of hours watching ICT videos, studying charts, but you can't put the pieces of the puzzle together. So the main takeaway from today's video is for you to understand that your priority is to identify these range-bound conditions if you are struggling. Only trade in the direction of a relative equal high or equal highs if you are bullish, and vice versa, only trade in the direction of a relative equal low or equal low sell side liquidity pool if you're looking for a short setup. And then you just want to see one side of that range ran during a macro window. Now, with what we discussed here, you're going to be taking less trades, which is what you want to do. You want to understand that less is more, not only in what you're implementing into your trade model, but in terms of how much you're trading. Become a master at what we've discussed here. When you see range-bound conditions and then you see them run one side and then flip it during a macro to the other side, become a master at those conditions first. And then as you gain experience, as you see other scenarios where you can target just one singular swing high or a session high or session low, then as you grow as a trader and your experience and your skill set grows, then you grow to take more trades and target different types of liquidity pools. But as your framework, your starting point, become a master at only trading when we have relative equal highs for longs and relative equal lows for shorts. I hope you guys enjoyed this video, and I will talk with everybody soon.